I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest Following the Money podcast. Today, I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and looking for opportunities, and when to be on defense and protecting your capital. About 8 weeks ago, in our July 2nd Following the Money podcast, I said to get ready for a corrective decline in the U.S. stock market. The benchmark S&P 500 peaked 17 trading days later on July the 27th. Our Asbury 6 risk management model subsequently turned negative 6 days later than that on August the 4th, reversing a positive reading that had been in effect since May the 18th and confirming the beginning of a corrective decline. The U.S. stock market is still in the midst of that corrective decline heading into next week. Today is Sunday, August 27th, 2023. Now, let's follow the money. In our premium research via asburyresearch.com, we have been pointing out an important underlying support level at S&P 500 4325 and have been saying that the index was likely to at least bounce there as traders tried to buy the dip. SPX 4325 was tested on August 18th, and the index quickly jumped by 3% into the August 24th high. However, a list of Asbury Research's key tactical metrics continue to warn that, minor bounces aside, the S&P 500 remains vulnerable to a deeper decline. We reduced our exposure to equities on August 4th when our Asbury 6 model turned negative, and that reduced exposure remains intact. Now let's move to sector rotation via our SEAF model, which follows the money around the 11 sectors of the S&P 500. SEAF is an acronym for Sector ETF Asset Flows. SEAF currently retains its late July overweight in energy. XLE, which is a ticker for energy, has since outperformed the S&P 500 by 4.2%. Premium subscribers can view the SEAF model's latest overweight signals through the end of last week by visiting the Research Center. For obvious reasons, we make our most recent trading and investment ideas exclusive to our paid subscribers. Now let's look at domestic asset allocation via our CARP model. CARP is an acronym for Cross Asset Relative Performance. Through the end of last week, 6 of the 8 equities-related relative performance comparisons in the CARP model are at strategic decision points from which their next sustained directional trends are likely to begin. Most of these relationships are leaning towards market defensive resolutions. This includes the broad market S&P 500 recent relative outperformance versus technology, along with several other relationships. These relative performance relationships often start to change direction 1 to several weeks before the individual indexes start to turn negative. And right now, these relative relationships are warning of more overall broad market weakness through the end of this quarter. Now let's move to global asset allocation via Asbury Research's U.S. versus the world model. Our model is currently overweight just 2 foreign markets, Mexico and Thailand, out of the 24 foreign equity markets the model tracks. If the U.S. stock market is indeed in the midst of an uncompleted corrective decline, this model is very likely to identify more foreign market overweight opportunities during September. Last year, during January of 2022, while the S&P 500 was beginning a new major downtrend, our U.S. versus the world model identified several overweight opportunities in South American countries, including Brazil and Chile. These went on to outperform the U.S. broad market by about 40% by June of that year. Finally, I was interviewed by Oliver Rennick of the Schwab Network, formerly the TD Ameritrade Network, last week on August the 22nd. During the interview, I went into more detail about where we think the major U.S. markets are headed from here for both stocks and also for U.S. interest rates. You can check out the video from that interview by visiting asburyresearch.com and clicking the Media tab. So there it is, our latest bi-weekly Following the Money podcast for today, and a short synopsis of what we think is particularly important to pay attention to as we move into the fall. We'll see you again right here in about 2 weeks with our next Following the Money podcast. In the meantime, make sure you subscribe to Asbury Research on YouTube for more podcasts and data-driven and investing information just like this. For those who like to attend financial seminars, I will be a featured speaker at the 3rd Annual FX Evolution Conference at the Wynn Hotel in Las Vegas on September 23rd and 24th. That's a weekend, that's a Saturday and Sunday. My topic will be Enhance Your Technical Analysis with Data-Driven Models. Now we close with the necessary legal stuff. This podcast is provided for information purposes only and is not intended to be a solicitation to buy or sell securities. The performance indicated from backtesting or historical track record may not be typical of future performance. No inferences may be made, no guarantees of profitability are being stated by Asbury Research, LLC. The risk of loss in trading in financial assets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition.